Hi guys, welcome back. It's been a minute. I know. By popular demand, I present Financial Fridays, the mortgage series. It's so refreshing to see so many new subscribers. Thank you for being here. In this two-part series, I will attempt to bring you the most relevant information to consider when making that major financial purchase. In part 1, we'll decide whether to rent or buy. While I've been gone, I've been on a few forums such as UNICEF's Activate Talks, Chill and Chat, and I Have a Right, Go Voice. Check out Facebook for those recordings. So your friends are building homes and you're wondering, should you stop renting? Move out of your parents' home and build too? Guys, I'm sure you want that media room with the pool in the backyard. And ladies, what about a well-equipped kitchen and a large patio? I know what I want. But wait, there's only one problem. You aren't sure if you can afford it. Hold up, making this big financial decision depends on what you can afford. Are you financially ready to build a home, or is renting still the smarter option? Let's compare and find out what's right for you. So, should you buy a house? There's no doubt that having your own address brings satisfaction and pride, but it also comes with extra cost and maintenance. That's why you want to be absolutely certain before making that financial decisions that you are ready. If you can answer yes to the following questions, then you just might be. Are you out of debt? We're talking less than 10K and no consumer debt. Let's be real, if we have to wait to pay off those student loans, we'll be waiting a while. Nonetheless, ensure that you have little to no debt. Don't be left out. Check out this video right here that we did like a year ago that could help you with your financial planning. Do you have a full emergency fund saved? What about life insurance? Did you know that it's a requirement to apply for a mortgage? If you got laid off today, could you pay at least 6 months of your mortgage and bill expenses while looking for work? Do you have enough cash for at least 20% down payment on a 30-year mortgage? This goes a long way because it helps to reduce the total value of your loan and your monthly installment. Will your house payment be 25% or less of your monthly take-home pay? An installment of a quarter of your net pay leaves room in your budget to achieve your other financial goals like saving for retirement or college funds. So what does this tell us? Are you financially ready for a mortgage? Even if you are financially ready for a mortgage, you need to be sure that your heart is in that purchase. That's why we're going to consider the pros and cons of buying. Pros. Every payment you make brings you closer to owning your house. When you pay rent, that money is spent, gone, buy. When you make a payment on your mortgage, you take one step closer to full ownership. 2. You cash in on appreciation that you can use as collateral for other financial decisions. 3. You have tax advantages. In the OECS, you're allowed to claim your mortgage interest as a tax deductible. In fact, in Dominica, this year, it was increased to $30,000 a year. You have the freedom to renovate as you please. You have your own privacy, and it's yours. But it's difficult to relocate. You have more expenses because homeowner insurance is a major spend. And who's going to fix that leaky pipe? You are. Or the plumber that you pay. So should you rent instead? First off, let's get something straight. Renting is not a waste of money. Giving your money to a landlord to provide shelter for yourself is not wasting money. You need a place to live. Though renting as a way of life is not something that I recommend, there are some situations where renting is the better option. Like if you're paying off debt. If you have loads of student loan, credit card debt and consumer loans, you should focus on paying down those debts. What if you want time to plan? Building is a long-term commitment. You should be very sure that that's something that you want to take on. What if you want to earn rental income? If your goal is to earn passive income, then ensure that you conduct sufficient market research before going into real estate. Now, though with renting you can move with ease and you have no high maintenance costs, rental rates may go up because of natural disasters and economic downturns. You have no financial incentives, no equity, no rise in property value, no tax deductions, and of course, you can't renovate as you please. So, is buying a mortgage the grown-up thing to do? Not quite. Taking control of your money is the grown-up thing to do. Now, if you're 30 and you're behind the curve, stop worrying. There's no need to invest in this big purchase just to keep up with the Joneses. Making any financial decision depends on your financial position and your financial goals. Whether it's as small as eating out on the weekends or as big as buying that shiny new car. For those of you who already have mortgages, let us know in the comments some of the things that you had considered. This is just part 1 of the mortgage series. Next week is where we get down to business. Tune in to find out more about the mortgage requirements and of course the rates too. Don't forget to share the video, like and comment, and be sure to subscribe for more Financial Friday videos. See ya!